Here is a number worth sitting with for a moment: 50 launches. In the first 4 months of 2026, SpaceX hit 50 orbital launches before April was even over, putting them on pace to shatter every record they have ever set. And while everybody is watching the rockets go up, almost nobody is asking the question that actually matters for your portfolio: who benefits from all of that? Because here's the reality. SpaceX is private. You cannot buy a share of it. You cannot own a piece of the most consequential aerospace company in human history through any public market. But what you can do is own the companies that sit directly in the path of everything SpaceX is creating: the suppliers, the infrastructure builders, the defense technology players who benefit every single time the space economy grows. That gap between what is happening and what most retail investors are positioned for, that is exactly where serious wealth gets built. By the end of this video, you are going to have 3 specific names, each one tied directly to the SpaceX momentum story in a different way. And I will tell you upfront, at least one of them is going to genuinely surprise you. Before we get into it, if you take your portfolio seriously and you want analysis that goes deeper than surface level noise, hit subscribe right now and tap the notification bell. Every week at Stock Pulse Alpha, we break down the numbers behind the headlines so you can make decisions based on data, not on whatever narrative is trending on financial Twitter. There are plenty of voices telling you what to buy. Very few of them show you why. That is the difference we try to make here. Now, let's get into it. Before I give you the names, the framing matters, because this is not a trade. This is a structural call. SpaceX is operating at a pace that was genuinely unthinkable 5 years ago. They are on track to run well over 100 orbital launches this year alone. Starlink is growing, the Artemis lunar ecosystem is actively being built, and with NASA's agreement for SpaceX's Starship to serve as the lunar lander still in place even as the broader Artemis program gets reviewed and restructured, the direction of travel is clear. More launches, more satellites, more infrastructure, more national security applications, more demand across the entire ecosystem. And because SpaceX itself stays private, that demand has to flow somewhere in the public markets. The 3 companies I am going to walk you through today are positioned to capture meaningful pieces of it. Keep one more thing in mind as we go through each of these. The people who made real money in the internet era were not always the ones who bought Amazon at the top in 1999. Sometimes they were the ones who bought the infrastructure, the components, the adjacent plays. That dynamic is very much alive in commercial space right now. The first company is Rocket Lab USA, ticker RKLB. Some of you already know this name. A lot of you have looked at it, decided it felt too speculative and moved on. And honestly, that reaction has kept a lot of investors on the sidelines during one of the more interesting build-outs happening in public markets right now. Here is where most people get Rocket Lab wrong. They look at it as a small launch company trying to compete with SpaceX. That framing is almost entirely incorrect. Rocket Lab is not trying to outspace SpaceX on launch volume. What they have done is build a completely different kind of business, and the market is still in the process of figuring that out. Think about what this company actually is. They launch small satellites with their Electron rocket. They manufacture spacecraft. They design and produce satellite components through their Space Systems division. They are a full-spectrum space company, and that Space Systems segment is where the revenue story gets genuinely compelling. The numbers tell you something real here. Full year 2024 revenue came in at $436 million, up 78% year over year. That is not incremental growth. That is a business transforming in real time. Space Systems revenue alone was up 46% in Q4 2024. Now pair that with what comes next. Neutron, their next generation medium lift rocket. If Neutron hits its development targets, Rocket Lab becomes a legitimate competitor in one of the most undersupplied segments of the global launch market. The backlog of demand from commercial and government customers who need medium lift capability is real, and the number of companies that can actually serve it at competitive cost is very small. Here's what concerns me about the risk side, and I want to be direct about this. Rocket Lab is not yet profitable. That means it carries more sensitivity to broader market sentiment and rate moves than a cash-generating mature business would. If the market gets hit hard, RKLB will feel it more than most blue-chip names. That is the honest version of the risk picture. But for investors with a 3 to 5 year horizon who believe commercial space is one of the defining industries of this decade, the question is not whether this business will be worth more in 2029 than it is today. The question is whether you are comfortable with the volatility it will take to get there. The smart move on RKLB right now is to build a position deliberately, not all at once, not leveraged, but consistently, with full awareness that the path will not be straight. Quick pause, drop a comment right now and tell me which of these 3 sectors interests you most: pure play space, defense technology, or lunar infrastructure. It helps us build better content, and the conversation in this comment section is genuinely one of the better places on YouTube to talk about specific names without the noise and promotion that clutter most finance channels. Comment and keep watching, because the 3rd stock on this list is the one I think has the most asymmetric setup of all 3. Let's shift gears completely. The second name is one that the personal finance world almost entirely ignores, and that oversight is honestly a gift. Kratos Defense and Security Solutions, ticker KTOS. The second I say defense, I know exactly what happens. Half the audience mentally moves on. They picture slow legacy contractors with boring government contracts and single-digit growth. Kratos looks nothing like that picture. Nothing at all. This is a defense technology company, not a defense spending company. There is a difference. Kratos has deep exposure to hypersonics, unmanned aerial systems, satellite communications, and electronic warfare. These are not legacy defense categories. These are the exact areas the Department of Defense is aggressively prioritizing right now because the security environment has fundamentally changed and traditional capabilities are not sufficient to address modern threats. Here's the growth profile most investors miss. Q1 2025 revenue hit $315 million, up 25% year over year. Full year 2024 organic growth was 14%. For a defense name, that growth rate gets people's attention when they finally look at it. The SpaceX connection runs through the satellite and space domain. As the commercial space economy expands, the demand for secure satellite communications, space domain awareness, and systems capable of operating in contested space environments grows with it. Kratos has real capabilities in exactly those areas, which makes them a natural beneficiary of the same macro forces that are driving SpaceX's private market valuation higher. Their target drone business alone is worth understanding. The military's need for realistic aerial training targets that can simulate advanced threats is growing fast. Kratos holds a dominant position in that niche. It sounds narrow until you understand how operationally critical it is and how few companies can deliver it at the required standard. That kind of defensible niche is the foundation of genuinely durable business value. Institutionally, serious money has been paying closer attention to this name. The share price has reflected that, up over 35% in a 3-month stretch as the market started to properly price the growth profile. The risk? Valuations in defense tech have moved. You are not buying this at the discovery price anymore. But the backlog is expanding, the revenue trajectory is intact, and geopolitical spending cycles tend to run longer than people expect. You are not too late. You are still in the early innings of the re-rating. If you have got a friend or family member who follows defense stocks or is building a portfolio around real macro themes, send them this video. It saves them the research time, and it helps Stock Pulse Alpha reach more people who are actually building wealth rather than just chasing noise. 2 taps. That's it. Now we get to the most unexpected name on this list. In my view, the one with the most asymmetric upside relative to what you are paying for it today. Intuitive Machines, ticker LUNAR. If that name does not immediately register, here is the essential context. This is the company that successfully landed a spacecraft on the surface of the moon in early 2024, the first American vehicle to do so in more than 50 years. And before you dismiss that as a PR win with no financial substance behind it, let me show you what has happened since. NASA awarded Intuitive Machines a near-space network contract with a total potential value of $4.82 billion. That is not a grant. That is a 5-year contract for lunar communications infrastructure, meaning they are literally building the backbone of how humans and machines communicate on and around the moon. Q2 2025 revenue was $79 million, and their total backlog now sits at $4.6 billion. Let that number land for a second. A company with a market cap that most people would call small is sitting on $4.6 billion in contracted backlog. Here is how this connects directly to SpaceX and Artemis. NASA still has its Starship agreement with SpaceX for the lunar lander. The crewed moon landing is on track for 2026. When SpaceX puts humans on the lunar surface, who do you think provides the communications infrastructure that keeps them connected? Who manages the relay network? Intuitive Machines is being built to be the communications and infrastructure layer for an entirely new environment. Think about what it meant to own infrastructure in the early days of any new frontier. The ones who built the backbone rarely lost. They have also secured a 3rd Lunar Mission Task Order, IM-3, which means this is not a one-mission story. They are building a cadence of operations that creates compounding capability and compounding revenue. Now, the risk picture deserves full honesty. This is a small company executing extremely difficult missions in an unforgiving environment. Space is hard. When something goes wrong with a company this size, the stock can move violently in both directions. This is not a name for money you cannot afford to lose. It belongs in the growth and speculative portion of a portfolio where you understand the risk and size accordingly. What partially offsets that risk is exactly what I just described. A $4.6 billion backlog, with NASA as the anchor customer, creates a floor of revenue visibility that most speculative small caps will never have. And as they successfully complete additional missions, the risk profile of the business gradually improves while the early-stage upside of holding it remains intact. That combination, government-backed revenue floor with early-stage growth optionality, is genuinely rare. Let's bring it home. Here's why all 3 of these names matter right now, together, not just individually. SpaceX is running at a launch pace the world has never seen. Artemis is building toward a crewed lunar landing this year. The space economy is not theoretical anymore. It is actively under construction. And the investment community is still in the early stages of allocating capital toward the companies that will actually build and operate it. If I had to rank these 3 for a portfolio right now, RKLB first for a pure-play space business with a transforming revenue model and a next-generation rocket program as optionality. KTOS second for the investor who wants real growth in a sector that carries less speculative volatility. And LUNAR, 3rd highest risk, highest potential reward, and the most direct exposure to the actual lunar economy being built right now. None of these are guaranteed. That statement matters, and I want you to hold on to it. Investing never is. What you are evaluating here is the intersection of sector timing, demonstrated technical capability, and real contracted revenue, not hype, not narrative, actual financial substance. Do your own homework, read the filings, understand the risk on each name before you size a position, and size it in a way you can hold through volatility, because the names with the most upside almost always come with more turbulence along the way. One perspective worth carrying forward: the companies that created lasting value through the last great technology cycle were not the flashiest names. They were the ones with real contracts, real technical advantages, and the staying power to outlast the sentiment cycles. RKLB, KTOS, and Lunar each have something real to stand on. That does not make them invincible. It means they have earned the right to be on your watch list. Before you go, 3 things. Hit the like button right now. It takes 2 seconds, it keeps this channel independent, and it helps this analysis reach investors who are actually building something. Subscribe and tap the notification bell so you catch the next breakdown when it drops. And leave a comment, which of these 3 stocks are you most interested in researching further? RKLB, KTOS, or Lunar? The next video is already waiting for you. We go deep on a completely different area of the market that has been quietly producing some of the most consistent results we track. Go check that one out next, and we will see you there.